This video is on product or value added method used to calculate aggregate annual value of goods and services. Remember, aggregate means total, annual stands for a year, and value is expressed in terms of money. This is the formula to calculate gross domestic product. Here, GDP is identical to summation of gross value added of all the firms in an economy. The abbreviation GVA stands for gross value added. The symbol before GVA stands for summation. N stands for the total number of firms in the economy, or it could also be told that it is the serial number of the last firm. I stands or represents the serial number assigned to the firm. In order to understand how the given formula was arrived at, let's consider the illustration. Imagine there are only two kinds of producers in the economy, which is obviously not true, but in order to make the process of understanding easier, this imagination helps us. Let's give them name. Asha represents the farmers and Akash represents the bakers. Group Asha is producing wheat. They grow wheat plant, and in a year they are able to get the yield worth rupees 100. The total value of produced wheat by them is rupees 100. A part of it they sell to the bakers group. The part that they sell is worth rupees 50. Now, the bakers group Akash has wheat, the main raw material. Using it and other ingredients, they produce bread, and the value of bread they made in a year is rupees 200. What did the Akash group do? First, they bought the wheat, which was worth rupees 50 from the farmers' group. Then, using the human labor and other capital goods worth rupees 150, they produced the bread. To the value of wheat, there is an value addition happening, that is of 150. Ultimately, the firm made a product worth rupees 200. Now, we want to know total production of the economy. We can get it by adding the value of farmers' produce and bakers' produce. Farmers' produce is 100 and bakers' produce is 200. Considering it, if we add them, we get 300 rupees. But You can notice here that the rupees 50 is double counted. We can eliminate this double counting by subtracting the rupees 50 from 200. This helps us to get the value addition done by the bakers. The table illustrates the same. Rupees 150 is the net contribution or the value added by the bakers. To the bakers, wheat is an intermediate good that helps them to enhance their final good, bread, which they are willing to sell. Wheat is the contribution of farmers to the economy and it is completely taken into counting. Hence, its value from the baker's production has to be subtracted. And when it is subtracted, we get the value of the bakers that they added to the product. Now, we know what is value added. But what we actually need to get gross domestic product is gross value added. A firm always has its capital goods, which is used to produce products. Even the baker's firm has capital goods, which might need replacement or repair. The value addition that includes the depreciation charges also is gross value added. The value added amount that already includes the amount spent to replace the capital goods is called the gross value added. Look at the equations over here. GVAI is equal to QI minus ZI, or GVAI is equal to VI plus AI minus ZI. GVAI is gross value added of ith firm. QI is gross value of the output that has been produced. ZI is the value of intermediate goods. VI is the value of the sales of the firm. AI is the value of change in inventories. Gross value of the output could also be calculated by adding up the value of the sales of the firm and the value of change in inventories. To understand the second equation, one needs to know about inventories, which can be learnt in another video. But as of now, this is how we can get the gross value added of a firm. Summation of all the firms' gross value added gives us gross domestic product. This is how we can calculate the aggregate annual output of an economy. Gross domestic product identical to summation of gross value added of all the firms in the economy.